I've traded zero DTE since 2019. For a while, I didn't pay too much attention to it. And then the performance started going down. And I said, okay, this is it. I've got to focus on this trade and get it right. From May 22, here's the performance on it. And this month, these are one contract trades. Okay. So I use one contract and trade these every day. I started putting on 2 contracts this month, and it looks like it's, we're going to go over 1,000. So do the math. This is a real performance that we do on these trades. And it's just an amazing trade to use. Based on the other trades that I use, it is the best performer. If you go back and do the math, you're actually earning about 20% a week on these trades. I know it's hard to believe, but it's the truth. In this scenario, I put on a 4170, 4180 call spread and a 4110, 4100 put spread. So in this case here, the trade got threatened. I actually rolled the trade and I gave it another 5 points of margin here, and I got a 40-cent credit on it. Next day, basically, the market went up and the trade expired worthless. This is probably ideal, but the ideal doesn't happen most of the time. But I just wanted to show you what would happen. And it actually did. I mean, these are real trades that I did. All right, now we're going to go to another trade. And in this case here, put a call spread and a put spread. We did get threatened in this one. And then I'm going to take you out and show you basically the anatomy of what happens when you roll a trade and you have to continue to roll it in order to get profitable. And this is pretty typical of what happens. So the original trade here was the 10 May 4115, 4105 put. And we rolled it and widened it to 4100, 4085. And we got a 30-cent credit for it. This was after the roll, and this is the position that we had. We went from 60 to a 90-cent credit, adding the 30 cents here. So now we rolled again, had to roll it again on 511. So we rolled the trade, and this time I didn't have to widen the spreads, but I did push it down another 10 points, okay, and got a 15-cent credit. Now the trade is 4090, 4075. And with a credit of 105. So on 512, we had to roll the trade again. Now this time the market went sideways or higher. That's why I was able to roll it from 4090 to 4060 on the short strike. Didn't have to widen the spread, and I still got a 25-cent premium on it. Now I did this because it was still close to expiration, and I wanted to give it more room so that it would be much safer. And that's why I did it. I probably could have waited and closed the trade, but I wanted to give it more distance so that I didn't have to worry about it.
By the way, you can grab my free SPX trade plan. It's your step-by-step guide for making these types of trades. It's completely free, and it's already been downloaded by over 10,000 traders. You can access it in the video description or by clicking the link in my bio. Okay, back to the trade.
So now in this case here, the new position now was 4060, 4045 with a 130 premium. And then at that point, now on the 16th, we were able to close it for 10 cents. And so the total credit of this position was $1.20. So again, this is a pretty typical adjustment that I do. And you think, okay, this is a lot of work to do that. Well, to me, it's not, because a lot of times what I'll do is I'll add premium on the other side and create iron condor. So I'm constantly making money on these trades.